Hello friends, Vladimir here, and this is the weekly review for the 23rd of June 2013. Actually, the last week of June, official. We will have, of course, 30, well, it will be Sunday, and the market will open on the 1st of July next week. So, what a week we have had this last week. It was one of the most interesting weeks actually lately, and we got some very interesting moves which I found to be a trigger or just the beginning for the much deeper moves. I'm talking about Bernanke, of course. I'm talking about the fact that he said that right for now he keeps his purchases as they are, which means 85 billions per month. But, and here is the big but, he said he kind of surprised by the fact that the inflation's rate is too small, and the job market is keep going and improving, and so, the same way some other data, and that means that maybe they will start to reduce their purchases amount even this year. The speculations are talking about 2014 and to stop or at least cut more than half until then the purchase amount of the quantitative easings, and maybe to start even to increase the interest rate because he will not have other way. So we can see the effect. Bernanke just turn around all the situations and all the scenario, and now the US dollar is back to be stronger. If you remember, I have been talking about the US dollar index on the previous week. Let me just upload it again. US dollar index, let me find it here. Here we go. If you remember, I was talking about this weekly channel, right? And the weekly trend line we have, and we said that it's right from here, it can go and make the retrace, right? Right from here, make some correction or push bit lower and then make a correction. It happened right from this bottom, from this support range, and now we're pushing to the upside. Looks like there is more to go. RSI crossed the 50 and going to the upside. Stochastic is very bullish. MACD is very bullish yet. It's pretty impressive correction, and there are several levels it can go. First of all, there's a trend line here between these spikes, which means 83.40, one more point to go. There is also this trend line which still could be tested. Well, actually it still seems that there is more to go to the US dollar index, and that means that the other dollar pairs like the euro dollar, pound dollar could continue and suffer more and more against the US dollar. So as long as this is a situation, as long Bernanke does not say nothing else, as long we don't get some alternative news, and as long as the European news keep being negative, keep being very, very bad, if it's a growth or the retail sales and everything else, the situation in Europe is not good. Greece start to back to the topics. Germany keeps to be in the topics. This night there was a meeting between the Euro leaders, and they did not find the solution for who is going actually to pay for the money that was printed and given to the central banks. Not good situation in the Eurozone. So the question is how all that will be printed on the trading. Euro dollar will be the first trade we're going to talk. If you remember my words on the previous week, it could push to 134 plus 135, and then we're going to have a drop down. We did have a drop down, a little bit earlier than I expected, but the drop down happened. The question is, what's next? I think the euro dollar still has more to go. This support line was broken pretty aggressively. Right now there is a trend line that is waiting for the euro dollar right here. It means the euro dollar can push all the way down to 129 once again. Will that? As I see the things, that's what should happen. The euro dollar should hold below the daily 20 MA, should cross the 200 MA, and that will be the good conditions for the continuation. How could we join the sales? Well, let's take a look on the 1 hour chart and the 4 hour chart. On the 4 hour chart we have two clear waves to the downside. It starts to build a continuing divergence right here. It builds a bearish convergence. In other words, we can expect the euro dollar to make some stop right on this range and try to push back. This pushback could be to 130, 160, that could be to 132, 130 plus. But right from here, look for a 4 hour chart bearish hidden divergence to form. That should give the push to the downside again. There is a trend line right here that is also waiting to the euro dollar. I think the euro dollar is able to make all the down move to the 200 MA first of all, which is around 130.60 approximately. I do think it could bounce back to 131.60, 132, maybe a bit higher. Then I think it will push lower, and you know my levels. This trend line, actually the biggest trend line I showed you before. As long as the daily chart does not create alternative sign, and that means a bullish hidden divergence or anything like that, I would expect the euro dollar to continue to the downside, and that means sell the rallies. Sell the rallies. Pound dollar. Well, pretty much same story. You remember that I was talking about that. It could make the move from 157, 158, 159. It started actually from the beginning of the next week. It crosses right now the 20 MA. All looks really well. All looks pretty impressive for continuing to the downside. I remind you that there is kind of a megaphone being built right now. It could go one way to the 151, or it could retrace a bit here before and push it to the downside right there. Watching on the 4 hour chart, there starts to be a continuing divergence, which means pound dollar is able to make a stop right from each of these support zones, create some bottom here, temporary bottom, create some pullbacks, and then bam, continue to the downside. I think the same story. Sell the rallies. Every rally we will get, we should be looking to sell opportunities. Pound could be very, very good opportunity. Unless, and here is a very important thing, pound dollar creates somewhere around this range a bullish hidden divergence, which is very, very able to happen within several days. Okay, not immediately on Monday. Within several days, pound dollar is able to create some bottom here, create a bullish hidden divergence on the daily chart, and right from there continue to the upside. So sell the rallies as long as the daily chart does not create a bullish hidden divergence. Once it does, that's a sign to get out. So that's about the two main majors. Dollar Canadian, I think we got very impressive sign last week. It did break above this very, very, very important resistance, and I'm talking about a 104 range. Actually it's 103.80, 104. Looks like it's going to continue. So all we want to see now is that it holds above this support. It used to be a resistance, now it acts like a support. We could expect a pullback to here, but right from there I expect it to continue higher. As long as it holds this level, that should be a bullish ride. That should be a bullish journey on dollar Canadian. It looks like a head and shoulders, inverted head and shoulders here, and it seems like it will this time complete the break of this sideways moves, and I think dollar Canadian is able to push all the way to 108, 110 range. So as long as the 103.50.80 holds, dollar Canadian should be trading to the upside. That's my opinion about this one. Another interesting opportunity I have before I go to the yen pairs and the Australian pairs is the euro franc. In my point of view, we're creating here a very interesting level. I was talking about that already several times in the past. But here we go. We're going closer and closer to the 200 moving average, support, trend lines, continuing divergence. Very positive signs that that's still a bullish hidden divergence on the daily chart. I do think it's going to create some bottom right here. I do think we will see a turn up. As long as the 120 holds, look for buy opportunities. 120. Why? Of course, because of the intervention, the official intervention from the Central Bank of Switzerland. Okay, talking about the majors, it's time to go and talk about some Pacifics and some exotics. Well, let's start with the Pacifics. I've been talking for 2 weeks now about the Euro, Australian, and other Australians. From my point of view, as I see the things, these pairs are creating a top. I do see a stop within. Maybe it's going to happen next week. Maybe it's going to happen right after that. I do think it's going to create a top and a stop. I do think it will take us to some good ride to the downside. Note that we are almost on a weekly extreme, which is a completely bearish sign. Watching on a daily chart, it's much over than 20 candles right. Beautiful divergence around the extreme. Beautiful engulfing at the end of the previous week. So, like an investment, in my point of view, this range here is a really important range, and I think we completed 1, 2, 3, 4, 5, or a big 3, 4, and now 5. I think right from here it will create something like A, B, C. I do think it will take us back to 136, maybe even 134, maybe even to the 132. Right from there I think it's going to stop and then to push it to the upside once again. From my point of view, within an interval of several weeks, Euro Australian will complete its correction to the downside to 136. It does not mean it cannot try to create another high, but it means that we are around the top, and I expect it to make some beautiful corrections. Same story about the Aussie franc, just the vice versa, of course. Weekly extreme almost, several supports on the range. Daily chart, you see that yourself, 20 candles plus ride. Beautiful divergence. From my point of view, it's only a question of time until it creates some stop around this range and creates 1, 2, 3. That could take us back to 091. It could take us back to 092.50, maybe even 094. Then, of course, I will expect it after this pullback. I will expect it to continue to the downside once again. So, as I said, in my point of view, in several weeks, it will start to make a turn around. Same about the Australian New Zealandian, by the way. I was talking about this pair a few weeks. There is something interesting going around this pair. It tries to break, but some bullish power always jumps in. I would be paying attention for this trend line, A break above this trend line will take the pair up to 121.50, 123 range. As long as it does not do that, I will not be surprised if it can push all the way to 116, 115, and then make a turnaround. As I said, I do think every push down will be reacted immediately by the bullish pressure. Will take, and as long as this pair does not retrace up to 121.50, 123 range. I would be looking to the bullish side, and of course I will, for long run, based on the monthly chart, I expect it to continue lower, much lower. I do see 112 within a period of several months. It will take time. So that's about the Euro Australian, Aussie Franc, Aussie Kiwi, and the same, of course, Pound Aussie, same story actually, like the Euro Aussie. Playing around the extreme. There are several resistances around this pair right now. That's why I think it's right in front of the top. I do see a pullback back to, maybe it sounds too dramatical, but back to 159, for example. I do think the pair will make a stop there. There is also a trend line that still has to be tested through the spikes, of course. Here we go, right? So I think within this period, okay, something like that, right from here down to this range or a bit higher, and then down to this range. I think that July, maybe a bit of August, we will expect some bearish cycle to come. This is my opinion about the Pound Aussie as well. Same with the Pound Kiwi, by the way. You know my opinion for very long run. I think 206 will be tested and 240. But watching the weekly chart and a daily chart, there is a divergence, so it could pull back first of all before continue higher. Anyway, buy every pullback like this one. On previous week I offered you some buy here, if you remember. If it goes lower, even more, because based on the monthly chart and the weekly chart, friends, it's not a question of if, it's a question of how and when only we will pull back. I do see 210 again, I do see 220, I do see 240 somewhere on the next years, maybe 2014, maybe 2015. That's how, from my point of view, it's going to work. What about the yen pairs then? We've been talking about the yen pairs several times during the last 2-3 months, and I told you, if you remember, the previous week, sorry, dollar yen could fly to the upside easily. For long run, I keep my bullish expectation. It does not mean that we cannot see the dollar yen retracing from here or a bit higher to the downside again, watching to create this bottom around 92-90 range. It still could happen. I personally not quite sure about that after such a dramatical candle as the previous week, but it could still happen according to the monthly chart, and then I would expect it to as I said, to make some stops here within several months and to continue the upside. For long run, in my point of view, dollar yen will go to 104 again, 105, 110, maybe even higher. Same story I have about the euro yen and pound yen. Again, it does not mean they cannot return to the downside right at the beginning of next week, push it to 122, to 120, to 118 maybe. Are still able to do that, especially if I watch a daily chart. It still looks like a head and shoulders. It means it can turn down and go to the downside for the next several weeks. It's still very able to happen. The scenario that will make me change my opinion about the still potential bearish move is break above 130.50, 131. If it managed to break and hold above, then no doubts we are going all the way to 138. Right? But as I said, I will not be surprised personally if right at the end of this week or the next week we will start to see some stop and pull backs to the downside once again, reaching 122, 120, maybe even a bit lower, before pushing all the way to the upside once again. Same, of course, about the pound yen. For long run, I do see 160 being reached again. The question if it's going to happen right from here, or if it will take us first of all to 144, 140 range, and then to continue. Only time will tell. According to the daily chart, it still looks like a potential head and shoulders. For that, of course, to happen, it has to break the neckline, same with the euro yen, and to the bearish expectation to be removed, 133.50 has to be broken to the upside. That's about the yen pairs. Again, for long run, I keep very bullish expectation, and every pullback is an opportunity to buy. And of course, no, I'm not talking about 50 pips pullback, I'm talking about big pullbacks. What about some exotic pairs? Dollar ZAR. Well, dollar ZAR, as I said, is able to reach 1020, 1040, 1060. All good there. It's creating some extreme on the weekly chart. I still think it's able to go to a bit higher. Then, if not from here, then from the next highs. I do expect 960, 940, 920 step by step to be reached. That's all, actually. Every next high is opportunity to invest. Enjoy the swap. If you sell these pairs, remember, only like an investment. Do not trade that. Only like investment. Enjoy the swap for the long run. That could be always bring you extra percentage. Dollar Turkish, same story. Daily chart was flying after this bullish hidden divergence. Right now, nothing special happening. Let it go. Let it create a weekly extreme. 1, 2, 3, 4 more weeks around the tops until it creates the next divergence. Then it will provide some amazing sell opportunity. So patience with that. Again, invest and hold, and joining and gaining an amazing swap. This one knows to pay very, very well. Oh, that's actually about the forex. One pair I just forgot, that's the Euro Canadian. I think Euro Canadian is a pair that's able to drop down every moment. I think this pair is able to take us back to 140, 142 range, 143 even. But watching on a daily chart and weekly resistances, it could drop down like 200, 300 points immediately. So I think you can start short that with investor style, of course. If you don't want to be overexposed for the euro dollar, then wait for 140, 142 to be reached. And if they will be reached, then we will be looking for sell opportunities with much more conservative trading. Few words about the Australian dollar and the New Zealandian dollar, because I know there will be questions about that. Australian dollar, and that's pretty much the reason why all the Australian pairs should reverse. Australian dollar made the double Bollinger Band duplication. Australian dollar is reaching very, very, very strong support zone. And Australian dollar is creating an extreme. Last time it was around weekly RSI around 20. It was here, and that was 2008. Remember the crash. Of course, the situation now are different between 2008 and 2013. That's why I think Australian dollar will create within 1, 2, 3 weeks some bottom. It's creating a very nice divergence on the next step on a daily chart, and it will retrace to the upside again. And that's why again I think all the Australian pairs will continue. Will make the reverse. On the New Zealandian dollar, we don't have oversold yet, but on the New Zealandian dollar there is very stiff trend line holding this pair right now, as you can see. That could be a hold, that could be a break. Next week will be pretty much a decider. That's all I have to say about it right now. Okay, watch that. It's very important to watch that. And now, very, 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 very important things. Indices, commodities. Let's start with the indices. For a while I'm talking about a short to come, and for the first time, let me just find it. Where are they? Disappeared here. Hold a second. Dow Jones. Where is that? Oh, here we go. Dow Jones and everything else. I was talking, the higher we go, the better the sell will be. Right now, with Bernanke's help, it's happening. I do not think that the most dramatical crash is about to happen. I don't think so yet. I think it will continue to the downside. We have over 20 candles right on daily chart, on my weekly chart, sorry, which means it still has more to go. Watching on a daily chart, we broke several important supports, and I think we are aiming this trend line together with the 200 moving average. To make long story short, every pullback is a sell opportunity. Watching on the 4-hour chart, continuing divergence is forming. Every pullback we get, sell indices if you still did not. Right? I think deeper correction is about to happen. I do think weekly chart will create a bullish hidden divergence somewhere there, and I do think weekly will then combine it with daily continuing divergence. It's still early. This is why I think sell every rally. This is relevant for the S&P. This is relevant for Nasdaq. Same story everywhere, right? As you can see, Nasdaq also. There is more to go. There is a trend line on the Nasdaq is waiting right here, as you can see. Okay, it has to be broken in order we go to the next trend line, and this is actually a channel. 1, 2, 3, 4, 5. We're aiming a 6. There is more to go. Hold that, let it work. Let it run, and every pullback, look to sell that. Alright, that's my opinion about the indices. And coming to the gold and the silver, I've been asked about them so many times. You all know my opinion. I was talking about that several times on the last weeks. There was a triangle that we expected to be broken. This triangle was broken and we were moving down. Friends, read my lips. Both silver and gold, within several weeks, if not during the next week, then within several weeks, they will create a bottom around this range. I think it's too much here. They will create a bottom around this range. They will create weekly continuing divergence combined with monthly bullish hidden divergence. And I think gold will create a bottom. It has over 20 candles right already. It has continuing divergence already. It has RSI around 20 already. All that will allow us to invest in gold with the weekly candle stop and the MACD turn to the bullish slope again. That will be the time to invest in gold and hold it for a long run. It could happen on each of the selected levels. I think gold and silver, which is creating same extreme bottom. It could be 19, it could be 18, here it could be 16. Each of these levels could make an amazing stop to the silver with the continuing divergences forming and the extreme RSI and the monthly bullish hidden divergences forming. I think these both commodities will be soon. Soon it means when the weekly chart create some stop, bullish candle, MACD ticks to the upside. That would be time to invest and hold both of them long run to gain big profits on the upside that will come within the long period. That's about these guys. And now some other interesting things. Coffee. Well, you know my opinion about the coffee. That's one way drop down. That was 1, 2, 3, 4, now 5. Continuing divergence on a monthly chart, continuing divergence on a weekly chart. Many supports coming closer and closer to its bottom. Coffee is, from my point of view, something to invest and hold. I think coffee can go lower to 105 maybe 110 to 100 even. It's able to do that. I think every next low will be just a great opportunity to have more buys. With such divergences, it's only a question of time. I think coffee will go all the way back to 200, but before that, I think first of all it will have to go to the trend line, this spike trend line. I think the lower the stronger will be the retrace. There is a lot of potential profit for both coffee and sugar, which has same amazing resistance divergence, sorry, confuse the words. Rare opportunities. I think that's an amazing investment, but an investment, don't trade it, invest in that. I think sugar, sorry, I'm confusing totally the words. I think sugar is able to take us back to 20 plus at least, if not even 22 plus. There is a lot to go, and that's why I think sugar and coffee are amazing opportunities to invest and to enjoy from them for long run. That will be all, friends, for this week. Thank you very much for watching this video. That was a lot of information this week because we have a lot of opportunities forming. Thank you once again for watching the video and dedicating your time. I wish you a wonderful week and enjoy your weekend. The part that stay still free of that. See you the next week. Yours, Vladimir Ribakov.